Thank you for checking out Film and Roll Up and Associates Municipal Market Update for the week of November 9th, 2020. My name is Adam Bauer, and I serve as CEO and President of Film and Roll Up and Associates. Last week, we experienced some technical difficulties, so we didn't get our MMU distributed on the first Monday like we typically would have every month. So we're coming to you the second Monday of the month. And I think that for a number of reasons, that's positive. One is we get to see what's taken place in the municipal market after we've had an election. And two, we have fixed those technical difficulties so we can show you a better presentation today. On our first slide here, we've changed our order of this a bit. Is what we're trying to show here is the inflows and outflows into municipal bond funds. And we've talked a lot about those March outflows when we all realized that COVID-19 was in the United States and going to have certainly an impact on our upcoming future. But then shortly after that immediate impact or that immediate reaction, we saw inflows into municipal bond funds. But I want you to go to that far right there, and that is outflows. There's been a significant amount of outflows beginning this week with the 2020 election under our belt. And so the stock market has gone up dramatically today. There's been some positive news related to COVID-19 vaccinations. It seems that most understand that we have a president that's been selected. So you've taken out a lot of uncertainty in the market. And if the COVID-19 vaccinations do prove to be as successful as we all hope, then you can certainly see signs that the economy may be coming back. But outflows from the municipal bond funds, so certainly there's been some upward pressure on interest rates. And the MMB did go up today, and the 10-year Treasury did go up substantially. We have a 10-year Treasury in the 0.95 range last time I checked. So been up quite a bit from where it was. This is our supply. So I showed you the demand. We have a little bit less demand. We have money flowing out. And the dotted lines represent the weekly averages for 2018, 19, and 2020 to date. Obviously, that green line is 2020 with the highest amount. And then I want to show you what happened the week of the election. I had talked a bit about how municipal agencies were trying to get a lot of bond deals done in September and October, really trying to get ahead of that election, because certainly it could be a lot of uncertainty when you have a change in leadership. And this chart demonstrates that. We saw very little volume last week. But now what's interesting to me is this week, the volume is back up. It's not at the 2020 levels, which has been higher than the last 2 years prior to that, but it is a lot higher than where it was 11 to 2020. So municipal issuers are saying, look, we'll make sure if we can, we'll get our deals done before the election day. But if we can't, we might not want to go election week, but we will come in the market shortly thereafter. And I think that's what you're seeing there. Now, where do interest rates stand? I've shown you this chart. Usually I start with this chart, but I thought it was more appropriate to show you that there's been an outflow from the municipal bond funds this week or so far. And so what we're showing here is that bar charts represent the interest rate range for each one of those maturities. And the red line represent where the municipal rates were as of 11/9/2020, so as of today. And they are up just slightly. You can see that yield curve is a bit steeper than some of the other weeks that we've talked about. Now, you've heard me talk about steep and flat yield curves. The next slide is going to help illustrate what I'm talking about there. This slide, what we're showing here, is the MMD for years 1 through 30, and we have the current, 1 year ago, and 5 years ago. So let's start with 5 years ago, that red line. If you look at year 1, it's pretty low. I don't know what we'd call that, 0.35. But if you go out to year 30, we're north of 3%. And so you can see that slope. That's a steeper yield curve. But look at 1 year ago. That tan line is pretty flat through year 5, and then it inches up through years 6 to 10, and then it starts to taper off again. And the green line is our current yield curve. So a similar slope or slopes as 1 year ago, but lower than that. So you can see we're at very low rates, but also that our yield curve still is relatively flat compared to 5 years ago. We do have this period between years 5 and 10 where you start to see it pushing upward. We generally kind of saw that trend even 5 years ago. It's just that's the most dramatic portion of the yield curve that we have to show. So we have the economic data, and I think this slide is going to get a bit more interesting to us all early next year. I think right now there's so many things going on. COVID-19 election just took place. There's some lawsuits out there about some claims about whether the calling the election is valid or not. So all those things are going to be the focus right now. But like I've told you in the past, if these items come in um, dramatically different than the projections, then those certainly could impact the municipal market. On our last slide here, we give you the film and rollout registered municipal advisors. I encourage you to reach out to any one of them for additional information or any particulars about a deal that they may have priced. But I thank you for your time. I always enjoy getting to share the municipal market with you 2 times a week. I will be presenting again next week. So since we couldn't do the first week of the month, we're going to do 2 times in a row. So thank you again for your time and look forward to talking with you next week.